My name's David Bowders. We're here today with our Ignite Speaker Series with Charley Hale. Charley is the CEO of Motion Control Enterprises, MCE. Welcome, Charley.
Good afternoon. Thanks for
Great
having me.
Yeah, great to be with you today. So this is a very interesting time in wholesale distribution, and I know MCE and with other companies before that, you've been very active in terms of playing a role in the transformation of the industry and really rolling up your sleeves and helping companies get bigger and better. Thought maybe you could just help our viewers today understand a little bit about your background, where you came from, companies you worked for, and just understand a little bit about where you've been.
Sure. My early background was banking and investment banking, and then I joined in probably 1998. I joined a very small business called Simco Controls in Columbus, Ohio, which grew to be FCX Performance. I joined the business. It was about $10 million in revenue. When I left, we grew it to roughly $350 million in annual sales, did roughly 30 acquisitions, sold the business 5 different times to a variety of private equity and public businesses, and really just had a wonderful time building that business from the ground up, both as CFO and CEO over 20 years.
So it's kind of interesting because of your background in investment banking and then as a CFO, how has that shaped your view of the industry that you're in and how you approach opportunities to unlock enterprise value in the industry?
You know, I was fortunate. I'm not I would say, a classically trained CFO. I'm not an accountant. I've had a couple of accounting classes. And so I was in a small business and a much more operationally focused role. So had the chance to kind of see the full lens, full charge of the business from the traditional finance and accounting operational side of the business, as well as sales and marketing. So I was fortunate. I was lucky in the right place at the right time and got to see a business from the ground up. Really, I think about the first big transaction, we sold the business to a minority position, actually a majority position of the business to a UK publicly traded company. And I remember we went to Barnes & Noble and bought every book we could find about mergers and acquisitions. So we kind of learned, and probably weren't good at the beginning, but I think got very good really by trial and error and just keep working hard at it over the years.
That's interesting. And I know we've been working together for over a decade. If we think about, what are the major opportunities to increase the value of a distribution business, what are the areas that you look for, either when you're operating or as you look at acquisitions?
Yeah, I think obviously these businesses, the majority of the employees, the majority of the effort tends to be focused on sales. And so I think the most underpulled lever in industrial distribution is pricing first. I think we can have tremendous impacts on the profitability of the business. We're not putting any more volume through it. We're just retaining more of those profits. So that's one that we always focus on. I think it's highly underpulled. And so we see that as an opportunity, both in our own business and businesses we acquire. I think we've made tremendous progress at MCE on the pricing front, but we still got more room to go. I think it's a journey. We're continuing to do it. It's ingrained into our culture, and I think we've gotten a lot better at it. And I think the other piece, since it is a sales organization, is how do we deploy our sales force? How do we train our sales force? What's the composition of that sales force? Traditionally, these are heavily outside sales driven efforts. And we try to supplement that. We think we can touch the customer with traditional or less traditional inside sales resources, vendor managed inventory, e-commerce, digital marketing. So that whole omni-channel approach. And then how do we get efficient? How do we deploy our salespeople at the opportunities that have the highest growth potential for us? And I think that's a key thing. And then we're really early on embarking on the whole cost to serve model and how do we apply those resources to those right customers at the right time.
So let's maybe dig in a little bit deeper into the pricing one. Why is it so hard for salespeople in industries with such high value add, with engineered solutions where it's often mission critical to the customer? Why is it so hard for them to get paid properly for the value that they bring to their customers?
I think it's a compensation. It's a reward system. They're rewarded for an incremental, even if it's not sales, if it's gross profit dollar, $1 is better for them than no dollar. And so I think it's it's really they feel that there's a ceiling on the price they can charge a customer. Otherwise, it's not ethical. And I don't think they don't price to value, they price to fear of losing.
I think that risk aversion is one of the things that people really haven't really understood in terms of sales teams, even though they're incented on gross margin dollars, for example, they still will trade, probability of winning for net profitability every day over and over again. And these thin margin businesses failing to understand the real price sensitivity of customers is a disservice to the customer and to the shareholder.
And I think in this environment, every time we buy a business, we do customer surveys and we get rankings of what is a customer value, right? What's important to them, and price is middle of the pack usually at best as what their primary concern. And in today's environment, it's generally, do you have it and can you get it to me is becoming one. And then I think it's the technical knowledge, the ability to provide application expertise, the ability to bundle multiple products from multiple suppliers into a single solution, add value. And I also think even more today, that full life cycle. We had customers that would have repair capabilities in-house. They don't have those anymore. So they're looking for a partner. And when we can provide the product in a timely manner, we can repair it, we can replace it, we can add value to it, the cost gets really lost. And most of these businesses have average invoice levels that are in the $1,500, $2,000 range. And so changes in price have really ultimately not a whole lot of dollar impact.
Especially when they're in mission critical applications where production lines are going down or equipment is failing in the field. I mean, you just think about the importance of piece part pricing in the context of the total economics of these markets. It's pretty remarkable that salespeople struggle so mightily to get paid properly.
And we figure, and some of our major process industries, so we've got high mission critical products. I think today those products are, they're working in higher pressure, higher temperature, more corrosive, more difficult environments, so they wear out. And again, a couple $1,000 high mission critical, lower average order value, and a really high cost of failure. It can be hundreds of thousands of dollars per hour in some of the end markets we serve.
So you've obviously understood that the value of the product is not the same in all the applications it goes into. How is that understanding of value created leading you to allocate sales resources differently?
We've really started to look at not only what we've sold to a particular customer, but how does that look relative to similar customers? And then we've really started to try to incorporate what is potential, what is this customer total value? We tend to think we have high wallet share, and in some instances we do, but a lot of them we've got a high wallet share of the stuff that we're selling them. We don't understand the potential, and we tend to focus on have big books of business. We focus on a relatively handful, there's a simple bandwidth issue for our salespeople, and we focus on those, kind of continuous customers. Now we've incorporated, we're going to shrink the book of business. We're going to give you more potential customers with more potential, and we're going to compensate you to develop those new customer relationships, to grow those, to increase the wallet share, to sell multiple products, cross-selling. Cross-selling is a big thing, particularly as we've embarked on the number of acquisitions over the past couple of years, where we bring our full sales force, that customer base, and bring value by expanding the offering we can bring to the table.
Yeah, you've basically got all of your lead gen already accomplished. You acquire the customer base and just overlay a broader, more valuable product assortment on top of it. You mentioned a little bit the idea of trying to transform the sales force and thinking about sales coverage models. Can you talk a little bit about some of the experimentation and innovation you've had in that area?
We've certainly done nothing revolutionary, but again, I think we've shrunk the size of those books of business for our salespeople, and I think we've transformed. Right, we've added or have recently added inside sales capabilities, a true non-customer service function, but an outreach function, and that can be, account reactivation. That can be focused on new names in support of the outside sales rep. Any number of reasons, but we're touching them that way. digital marketing to make sure we've got, kind of a variety of costs that we can deliver. And then, we will do business with you how you want. Could that be e-commerce? And so we take those higher cost to serve or those very low volume, kind of operationally intensive transactions and customer relationships, and can we transact those digitally? And so we're looking at that. We're also given, I think it's really become a need as we've added new technologies, new capabilities by acquisition, that we've got some technical resources that we put out in the field that can drive, that knowledge and support the existing outside sales force in bringing those technologies into their customer relationship. So I would say the overall investment in sales resources is probably growing. It's just looking differently, and we've added more capabilities in support of it.
One of those investments I know SPARXiQ's been working on with you is training the sales force and bringing professional selling skills into that team. Can you talk a little bit about, what was the prior state in terms of skills development, sales skills development in particular, and tying back to that idea of the platform capability of sales, how you see that playing out?
It's interesting. We're a sales organization, and it's not just MCE, it was FCX, and I'm sure many others. We do a really good job of training the very technical aspects of what we do, part numbers, application expertise. We never step back and teach people how to sell. And so we started this a couple of years ago. We started embarking on this, and everybody said, well, our really experienced salespeople are not going to like this. They're going to be insulted by this. And what I found is they were craving this. Just how do we sell? How do we professionally sell? And we really got a lot of buy-in. And our customers, if we think about purchasing people, they're probably some of the most well-trained and often trained employees in our customers' organization. And so we're going in at a big disadvantage. And so we've really embraced it. Part of the reason for getting scale, I think, is so that we can invest significantly in that training and teaching them their craft. They've appreciated it. They said, we appreciate that you've invested in us, and we've gotten better by it. And I think we're really just starting. And it's not just at the sales rep level. I think so often sales transformations all focused on the rep level. And you really have got to develop the management piece. And so we're spending time making sure we develop our sales managers, giving them the tools. And as we think about having a consistent sales management process, that's paying big dividends.
Yeah, I know coaching is one of the big topics out there today. And for a long time, managers really weren't coaching in terms of sales performance, selling skills performance, their sales teams. They were more focused on talking about deals and making sure they were quoting things, or they were not charging too much and getting cheap prices to the customer. Now, when you start to focus on the skills that actually move the needle, as a CFO, you must appreciate that you have more predictability of revenue as you start to understand what are the skills gaps that are causing, let's say, slower growth for some sales reps compared to others.
We've over the years, as a CFO, as a CEO, we would, if our key customers bought from us, we had a good year. If they had a slow year, we had a slow year. So these types of initiatives and this focus is really, it's broadening that customer base. It's focusing our people on doing the right things. It's focusing on, as you said, it's not just, what part did I quote to them, and did I close that opportunity? Have I finished that quote? It's how do you overcome objections? How do you interact with that customer to get to a successful close? And like I said, we've made some progress. We're early on, and we think there's a whole bunch of upside for the organization because of it.
Yeah, I think if you look at, and you guys, everybody has their own numbers here, but for a typical distributor, they're spending maybe 10 or 15, or even in some industries, 20% of revenue, depending on their comp structure for their sales teams. And if you ask the question, how carefully are they allocating that resource? You see basically a lack of call planning, a lack of strategic account management, a lack of, real disciplined, which customers will we assign salespeople to, which ones will we not assign salespeople to, which industries are profitable and growing versus which ones are just treading water or underwater. I always joke that if this were an airline business, the way distributors would be managing their fleet and their crews they'd show up at the gate each day and ask the passengers where they wanted to fly. And you'd end up with, Embraers flying to Frankfurt and 747s flying to Louisville. because nobody knows what resource should be flying where and why. And this just random roulette wheel of resource allocation is just insane when you think about it from a economic or financial perspective.
And it's a valuable resource we have. We've got an experienced technical sales group. We're giving them the tools to be successful. But I think, as you pointed out, most importantly, we're focusing them on where's the opportunity, where are they going to maximize, their own personal income. And for us, it's all about, are you growing? Are you adding new customers? And that maximizes the income. And we took some of those customers out of coverage, yet they continued to grow. And so we focused our people on the growth opportunities, and we got growth out of that. We took those out of coverage, and we continue to grow. We've applied the right resources to make sure that they're handled, as we continue to develop the inside capabilities, we think there will be more of that. And then I really think this notion of technical resource in support of that, both the field sales force and the inside sales force, is critical today. And our customers need that, our own teammates need that, and that's an investment we've been making.
So when you think about some of the capabilities that you see, or lack of capabilities you see in the marketplace when you're acquiring, how do sales teams measure up now that you have more of a blueprint for what you're trying to accomplish?
Right, and anybody that works with you, the pricing plots all look the same, right? No matter which distributor, which customer, and I think that's the same thing on the outside sales force. We all tend to, as business owners, a lot have been salespeople, and they've evolved into owners. And so, these same type of characteristics are prevalent in almost every distributor that we look at or we've acquired. The pricing opportunity looks the same, and so it's rampant out there. And acquisitions, it's an arbitrage game, right? We want to, from a multiple perspective, we want to buy a lower multiple, and ultimately we'll sell this business as a higher multiple. We want to buy unoptimized pricing and sales businesses and optimize those and get that double arbitrage. And it's funny, Frontenac is our majority private equity owner. They've been great partners, and I know every time as they look at new opportunities and we look at new opportunities and we talk to you about what's the pricing, everybody's initial reaction, there's no way that can be there, but all of them look the same and all have the same answer works. And so the playbook, it's not a big playbook. We don't run a whole lot of plays, but we think they have big outcomes.
Well, we've certainly run that a number of times successfully. It's kind of funny because one of the saddest days for me, often when we do these types of projects, is that we come in and meet the former owner the day after it closes or something like that. And then we start talking about the opportunity, and they realize they left half the enterprise value on the table with their customers. And that, in many cases, we've talked to these companies over the years, and they keep looking at the opportunity, they keep dipping their toe in the water, and then they always, in the end, they usually shrink away from it. And then it's left to somebody else to capture that value that was sitting there all those years. Employees were laid off. They failed to grow. They lost key vendor lines. They didn't invest for the future. They couldn't develop their e-commerce or their technologies because they just weren't getting paid for the value. They didn't have the resources. What is it that you think, looking back on your career, has led you to succeed at this thing when so many companies who either were afraid to try, they tried half-heartedly, or they just gave up on it over time?
Yeah, I think it's really just simple, having the will to do it. And every time I've done this, it's the same pushback, and we have some success. Our people see increased income because of that. They start to understand their value. Then it starts to, we've got some deputies out in there. We've deputized people to do it, and we didn't quit. And we won a few people over, and then those people are probably better at winning more people over than I am preaching, from the ivory tower about we got to do this. And so I think it's just stopping, because it's really easy. There's a lot of blowback early on, and hey, this will never work. I'm not going to do this. You can't do that to my customers. And it's easy to stop at that point. To me, it's just, you just do it. You face those battles head on. You communicate a lot. You're visible. You're present, and it makes sense. And I think back to the FCX days as the CFO and then as the CEO, really having executive level, this is what we're going to do, and we're going to keep doing it, and we're not going to stop. And and we're constantly refreshing it. We're constantly getting better at it, and now it's, I wouldn't say it's easy, but it's become part of the culture, and people understand the value that we bring, and they want to get paid for it.
I think one of the things that maybe isn't explicit in your mind, but it's becoming obvious to me, is that you always have started with a very clear financial objective in mind. And so unlike some companies where they're just kind of like, okay, well, we just want to try this and see what happens. I think you start with the end in mind. And, thinking back on FCX now that that's kind of a done deal. I mean, how much higher was the ceiling than what you thought it was when you first started?
Oh, it was probably twice as high. And that journey from start to finish was significant. And I think if we would have gotten half of what we ultimately gotten, we would have been happy. But we kept pushing it, and we're doing the same here at MCE. We see the same opportunities. And again, I think when you start to win people and you align compensation and you align incentives and you've got a feedback loop and they see what success looks like. And again, I think it's what's our value? I mean, we've invested heavily over the past year in inventory. We've invested in tremendous, aftermarket capabilities and engineered solutions and all forms of value add and things like vendor managed inventory and e-commerce. And so when I think we can bring that value to the customer of doing business how they want, we can participate in vendor consolidation, and we can do a full life cycle. It's invaluable to them. And so I think for us, it's, we've built a business that we think delivers value to the customer as the premise, and that we should get paid for it. And like I said, we've made tremendous progress, and I think we've got more room to go. It's a constantly evolving. And in fact, I think this past 12 months or so, where we've seen tremendous inflation, and we would go from 1 or 2 price increases from our suppliers to some every month or every other month. The volatility actually created an opportunity for us.
Yeah, I think, if you look at the larger picture, what you're doing is you're being, some salespeople will say, we can't do this to our customer. We can't raise our prices. But I think what you're identifying here is the pathway to being a higher value added, more profitable, wealthier distributor. And at the end of the day, does a customer who's using your services for mission critical applications want you to be cheaper and lower quality capabilities, or do they want you to be priced for the value that you bring and constantly investing in new value capabilities for that customer? I think it is the customer centric approach. And before you think about this as like a series of self-limiting beliefs on the part of salespeople, it was actually suppressing the value that they could add to the customer. And that's kind of the ultimate irony, is that while they were so worried about what the customer would think about pricing, they were basically suppressing the ability of the business to grow and innovate and do all these things that you're talking about.
But I think it's a great time in the channel. I mean, we've had some right size and downsize in some of our manufacturers, and they've become much more focused on producing good products efficiently. Our customers, a lot of that technical expertise and maintenance expertise has retired and it's gone. And so there's this vacuum in the channel. And I think it's a great place for us to participate, to fill that vacuum and deliver the value that the customers they need now more than ever.
And you talked a little bit about this whole idea of value. I know culture can be a fairly nebulous term that a lot of people think is a bunch of flim flam or whatever, but how do you think these types of disciplines that you're talking about start to tilt the culture in a healthier way?
At the very simplest level, right? It's winning. And when you start to have success, people want to be a part of success. I think, MCE is a business we bought in 2018. We've done 7 acquisitions in 22 months. And so we brought a bunch of different cultures. And people say, well, we don't have a culture. And there is a culture. It may be good, it may be bad, but there is one. But we've really started to drive this unity, this wanting to win, wanting to deliver value. And so it's really, and I think over the past 6 months, I've seen it catch on. We had all of our sales team together a few months ago, and you could just feel the energy of, hey, how can we work together? How can we serve this customer? How can what you do help me do what I do, and vice versa? And so it's winning. It's knowing we're bringing value to the customer. It's getting paid for that value. We're having success. And I think we've done a really good job of, we've elevated people in the business. The legacy employees that have been there a long time have assumed leadership responsibility. We've brought people in from the outside that have been in big companies and small companies and public and private equity backed. And so we've created this team that's, recognizes and respects the past, uses the talent that we have, maximizes that talent with people from the outside with different perspectives. And it's a group that really just gets along well. And that's the culture. I think it just has fun together. And it's been exciting to see. It's hard to get. I mean, there's a lot of resistance as you go through acquisitions and change, but it really feels palpable today. And unfortunately, we've got a great team that allows this stuff to happen and continue to improve upon.
Well, I know you're always innovating. What do you think is the next? You've already worked on pricing, obviously. You've worked on sales transformation, sales coverage models, all of that. What do you think the next horizon is for your company or for distribution in general?
Yeah, we're going to continue to work on those two things that you mentioned. I think the whole cost to serve model, further refining how do we deliver, where do we deliver, what level of resources delivered is critical. We're really early on. We've kind of brute force some of that stuff, but I think as one thing we like is data and analytics, and I think that's part of the CFO background that helps. That's an area that I think we've got a lot of upside on as we move forward, and it will take what we have done and I think accelerate it moving forward.
Yeah, we know from the transactional data analysis, if you compare top quintile sales reps to bottom quintile, and every company has 20% in both buckets, the top quintile will typically get 10 extra margin points controlling for product and customer mix. They'll get 6 times share of wallet and twice the customer retention. So the sales transformation, to the extent we can reduce the Wild West variability and really have higher consistency and quality, there's a lot of margin and revenue opportunity there.
Absolutely.
And I think with that whole idea of profitability, it's yet another great frontier, because we know from the data that a typical business makes 1.5 to 3 times its net profitability before it carves out some of that profitability and gives it to their money losing customers and vendors. And so the ability to precisely measure all of the wasteful customers that we're serving today and pivot those resources, once you have more sales discipline and more sales process, you can really pivot that towards high profitability, high growth customers, and out of those profit draining customers. And I think that's probably based on what we've seen, one of the next great frontiers.
Absolutely. We're excited about that. And it's interesting. I look at some of the most technical, most value add things we do, and we tend to charge the least amount for those. And so I think as we start to get that piece corrected and really get that ingrained for us into the business, it's going to have a big impact.
Well, there's a lot to be proud of with the MCE story. I think you have a compelling answer to the question: what does it take to make it better to be our customer, better to be our employee, harder to be our competitor, and better to be our shareholder? So our congratulations to you on the journey, and we appreciate the opportunity to talk with you today.
Thank you, David.
Thank you.